But first, let's get back to the markets. Up 219 right now. Stocks trading higher on the heels of Larry's remarks there, Kudlow's remarks on trade. Joining me on set, Moody's chief economist, John Lonski. And, you know, I know Larry well. I've known him for many years, and he and I actually used to do a show together on some other network way over in New Jersey, I think. Anyway, he's always been positive. I mean, even at times when things looked like they might be getting rough, Larry always had a positive outlook. But right now, I really think he's justified. I mean, there's a lot to be excited about. So what do you think, John? Do you agree with his assessment?
I agree with his assessment. I think that this worries over trade are overdone. Cooler heads are going to prevail. We are going to avoid a trade war that otherwise could do a great deal of damage to global economic activity. I like the fact the labor market is expanding. My only worry is that interest rates might get ahead of themselves. And moreover, I'm also concerned that some businesses may overestimate their pricing power.
What do you mean by that?
By that, what I mean is that businesses hear all this talk about inflation moving higher. And where in the past they were increasing prices by 1.5%, 2.5% and doing quite well, they now believe they could go ahead and hike prices by 3% or 5%. But what they'll discover is that consumer incomes aren't really growing rapidly enough.
Well, that's self-correct, right, John? I mean, if you own a store and you're like, okay, you know, I think things are looking good, market's up. I'm going to charge more, and nobody buys your stuff, then I think that you would pretty quickly say, okay, let me go on sale.
The inventories are building up, and what do you do when the inventories mount? Cut prices.
Okay. So there's, I mean, okay. So a little bit of a self-corrective process then, if that were to happen. Let me ask you about the threat of a so-called trade war. I look at this, and I think it's actually not as hard as everyone's making it, because we're China's biggest customer. Right? I mean, we're everyone's biggest customer, basically. We're the world's biggest economy still.
The customer is always right. So at some point, I think China has to heed the demands of the Trump administration as far as opening up its economy to U.S. exports, and as far as not demanding that U.S. companies who do business in China hand over their trade secrets.
So how long does this take, though, if we play this out, right? Because there's some political risk here for the president and certainly for the Republican Party come midterms. Because if prices go up at, you know, Walmart and you can't buy as many cheap widgets anymore, you're not going to like that very much.
And that's why the administration is unlikely to push very hard on the trade front. If doing so frightens the equity market, I think a sell-off by equities in response to trade fears would tell the administration, cool it. Let's face it, international trade is funny. The benefits from trade tend to be broadly dispersed. The cost of trade, free trade, tend to be highly concentrated. So it behooves the administration to move cautiously on this front so as to avoid prompting price hikes that would be ruinous for the midterm elections.
That said, you know, if they call your bluff, you got to be willing. That's part of negotiation, right? You always got to be willing to walk away.
That's true.
And so Donald Trump can't say, hey, you know, we're going to threaten this, and they say we're going to threaten this, and if you're not willing to follow through, then you're going to have a big problem. And maybe it comes with political risk, but you got to mean what you say.
But as you implied, you have to know when to fold them and then get ready for the next hand.
I like that song. Kenny Rogers. All right. John, it's good to see you. Thank you so much.
My pleasure.